This is Friday, January 30th, 26. It is the last trading day of the month. The last trading day of the week, and silver just crashed. Silver collapsed from $121 to $95, a $26 drop in a matter of hours. Gold followed, crashing from $5,600 to $4,950, wiping out $600 almost instantly. If you are watching this right now and you feel panic creeping in, I need you to stop, take a breath,
and watch this entire video, because what I am about to show you does not make sense. The numbers do not add up. The story the market is telling you is not the real story. Silver just fell 22% in a single week, one of the largest weekly crashes in years. And yet, at this exact moment, you cannot buy physical silver. Let me repeat that. The price is crashing, but the product is disappearing. The Perth Mint in Australia has suspended silver sales. The United States Mint has suspended sales. The Royal Mint in the United Kingdom is out of stock. Dealers in India are defaulting on deliveries. Costco has introduced purchase limits on silver bullion. Let that sink in. The price is collapsing, but you cannot buy the metal. Does that make sense to you? Does that sound like a real, functioning market? In any normal market, when prices crash, supply increases. Sellers come out. Inventory floods the market. That is how markets are supposed to work. But that is not what is happening here. Here, the price is crashing while supply is vanishing. The price is falling while the entire world is running out. Something is very wrong. And by the end of this video, you will understand exactly what it is. Welcome to the hidden economy. If you are new here, this channel exposes what is really happening in markets, while everyone else is distracted by headlines and noise. Subscribe right now, because this is the kind of analysis you will not find anywhere else. And if you find value in this video, hit the like button. It helps push this information to people who need to see it. Now, let me explain why today's crash is not what it seems. A few days ago, I released a video where I warned that $117 was a critical level for silver. I showed a 30-year historical pattern. I explained why a sharp correction was likely. At that time, almost everyone was bullish. And now, here we are. Silver crashed from $121 to $95. But here is what I did not expect. I did not expect that while silver was crashing, the physical silver market would completely break down. I did not expect mints around the world to suspend sales simultaneously. I did not expect such a massive disconnect between paper silver and physical silver. And that is exactly what we need to talk about, because understanding this could save you from making a huge mistake. First, let me explain how the silver market actually works, because most people do not understand it, and that misunderstanding is costing them money. There are two silver markets, not one. And right now, they are telling two completely different stories. The first market is the paper market. This is COMEX. This is futures contracts, derivatives, ETFs, and digital silver. This is where hedge funds, banks, and institutions trade billions of dollars worth of silver every single day. But here's the key thing you must understand. They are not trading real silver. They are trading paper promises, contracts that say someone might deliver silver at some point in the future. Most of these contracts are never delivered. They are rolled over, settled in cash, or closed out. This is not metal. This is a casino.
The paper silver market is like a massive poker game. Billions of dollars change hands, but almost no one ever touches actual silver. Now let's talk about the second market, the physical market. This is real silver, coins you can hold, bars you can stack, metal that exists in the real world. And here is the critical point. These two markets are supposed to be connected. The paper price is supposed to reflect the value of physical silver in the real world. But right now, that connection is broken, completely broken. The paper market says silver is $95. The physical market says you cannot have any at any price. One of these is lying to you. So ask yourself this: do you believe the number on a screen or the empty shelves? Now let me show you the evidence. Let me show you what is really happening behind the scenes. And pay very close attention, because understanding this could prevent you from making a catastrophic decision. We start with the Perth Mint in Australia. The Perth Mint is one of the largest and most respected mints in the world. It has been producing gold and silver bullion for a century. Governments trust it, institutions trust it, retail investors trust it. On Thursday morning, before the crash even happened, when silver was still trading near $117, the Perth Mint sent a notice to its wholesale distributors. I have seen this notice. Here is what it said. Due to increasing worldwide demand for silver bullion products, we have a large backlog of orders for the 2026 Kangaroo 1-ounce silver bullion coin. As a result, we have decided to pause taking wholesale orders for this coin from today until February 23rd in order to clear back orders. Read that carefully. Increasing worldwide demand, not decreasing, increasing. Large backlog of orders, not excess inventory, backlog. Pause taking orders, not a discount sale, a pause. And this pause lasts almost an entire month. And remember, this message was sent when silver was still at $117 before the crash, when everything looked perfectly normal on the surface. The Perth Mint also announced monthly allocation limits to ensure all regions receive stock. That is rationing language. That is what happens when demand far exceeds supply. This is not a small private company having a bad week. This is the Australian government's official mint telling the world they cannot keep up with demand for physical silver. Australia is one of the world's largest silver-producing nations, and even they cannot source enough metal. Let that sink in. Then the crash happened. Silver dropped from $117 to $95, a nearly 22% discount in just days. Now think logically. If the Perth Mint was already overwhelmed when silver was at $117, what do you think happened when silver dropped to $95? Every serious investor on the planet just saw a massive discount on an asset that mints already could not keep in stock. They bought. The crash did not reduce demand, it created a tsunami of demand. Now let's move to the U.S. Mint. The U.S. Mint has suspended sales of all silver numismatic products. Their website lists products as temporarily unavailable. Their customer service claims they are updating prices. But here is what actually happened. Silver prices moved so fast that the Mint could not keep up. They were selling American Silver Eagles at around $91, while spot prices surged above $90. They were losing money on every sale, so they stopped. They shut everything down. When products finally came back online, prices jumped from $91 to $169, an 86% price increase overnight. The 2026 American Silver Eagle, originally scheduled for a January release, has been delayed until late February. Subscriptions are already sold out. This is the official government mint of the United States, telling you two things very clearly. They cannot sell silver at old prices, and they do not have enough inventory at new prices. Now let's talk about India. India is one of the largest silver markets in the world, and right now, dealers are not just running low, they are defaulting on deliveries. That means people are placing orders, paying in full, and then not receiving their silver. Amazon India sellers are canceling orders after payment has already been accepted. Headlines from India say it plainly. Not even a sliver of silver available. This is no longer a supply issue. This is a breakdown of the physical delivery system. Now let's go to the United Kingdom. The Royal Mint, one of the oldest mints in the world with over 1,000 years of history, out of stock. Silver bars are gone. Even basic 1-kilogram bars are unavailable. When the Perth Mint, the U.S. Mint, and the Royal Mint across 3 continents all experience shortages at the same time, this is not coincidence. This is a systemic crisis. And if you think that is alarming, wait until you hear about Costco.
Yes, Costco, the place known for selling products in bulk. Costco now has purchase limits on silver bullion. You cannot buy unlimited quantities anymore. Costco is rationing silver. Think about that. A retailer famous for bulk sales is limiting how much silver you can buy. Why? Because demand is overwhelming supply. But now we move to the most disturbing evidence of all. And this part should genuinely concern you. Let me show you what is happening in China. Now let me show you what is happening in China. And this is the part that should genuinely scare you. I am looking at fresh data from today, January 30th, from the Shanghai Futures Exchange. Right now, Shanghai silver vaults hold approximately 455 metric tons of silver. That sounds like a lot. It is not. That equals roughly 14.6 million ounces. And here's the number that made my jaw drop. In one single day, 26.94 metric tons of silver were removed from those vaults, almost 27 tons in 24 hours. Let me put that into perspective. That is roughly 870,000 ounces of physical silver removed from a single exchange in one trading day. At this rate, the Shanghai vaults could be completely empty in less than 3 weeks. For further context, global annual silver demand is over 1 billion ounces. Shanghai now holds just 14.6 million ounces. That's barely 1% of annual demand. That is not a buffer. That is not a reserve. That is a rounding error. And yet, mainstream financial media is completely silent.
No headlines, no warnings, no coverage. Now here is what makes this situation truly alarming. China has restricted silver exports. Silver has been classified as a strategic national security asset. China is treating silver the same way it treats rare earth minerals, materials critical for weapons systems, AI infrastructure, and advanced technology. So think about what China is doing. They are restricting exports. They are draining their own exchange vaults. They are moving silver from public warehouses into private storage. What does that tell you? It tells you China knows something the paper market does not. While the paper price crashes, China is taking physical delivery. While Western traders dump contracts, China is accumulating reality. Now ask yourself, which side understands what silver is really worth? And now we come to one of the most important revelations in this entire video. Pay very close attention. Almost all of the selling this week has occurred during U.S. market hours. Not Asian trading hours, not European hours. U.S. hours. When New York opens and COMEX begins trading, silver dumps. Red candles, aggressive selling, price collapses. When New York closes, silver stabilizes. Sometimes it even rises during Asian trading hours. Then New York opens again and the selling resumes. This pattern repeated every single day this week. That is not random. That is coordinated. The United States sells paper. The rest of the world buys physical. American banks and institutions are creating digital silver out of thin air, keystrokes, numbers on screens, synthetic supply. Meanwhile, buyers in China, India, Japan, and the Middle East are loading real silver onto trucks. They are taking delivery. They are draining vaults. They are removing metal from the system. One side is playing a video game. The other side is walking away with the prize. This has been the pattern for decades. The West sells paper, the East buys physical. But right now, it is happening at a level we have never seen before. The disconnect has become extreme. And this is not a free market. This is a rigged system. If you do not understand how this game works, you will be the victim of it. You will sell your physical silver at the bottom because the paper price scared you, and someone in Shanghai or Dubai will happily take it off your hands. Now let me show you another critical indicator. Silver lease rates. Lease rates are the cost to borrow silver. In normal markets, lease rates are near zero, around 0.3 to 0.5%. Right now, they have exploded.
Some reports show 8%. Others show numbers as high as 39%. Let that sink in. 39% to borrow silver.
That is not normal. That is panic. That tells you physical silver is so scarce that holders are demanding massive premiums just to lend it temporarily. When lease rates spike like this, it means the physical market is broken. There is not enough real metal to go around. Now let me connect everything for you. What we are witnessing is a complete breakdown of the paper pricing mechanism. For decades, banks have controlled silver prices through paper trading. Hundreds of millions of ounces of paper silver are traded every day, far more than the physical market could ever support. This allowed prices to be suppressed, but something has changed. Physical demand has overwhelmed the system. Mints are shutting down, vaults are being drained, dealers are defaulting, lease rates are exploding. The paper market says $95. The physical market says there is no silver available. Eventually, one of these has to break, and we are getting very close to that point. Now let me tell you what all of this means for you, because understanding the situation is useless if you do not know how to act on it. And I'm going to be very direct, no sugarcoating. If you are holding physical silver, do not panic. I repeat, do not panic. Do not let a manipulated paper price scare you into selling real metal. Look at the facts. Mints are suspending sales. Dealers are defaulting. China is hoarding. Vaults are draining. Lease rates are exploding. And you are holding the one thing the entire world is scrambling to obtain. The paper price is noise. Your physical silver is worth what someone will actually pay for it in the real world. And right now, that is far more than $95. If you are holding paper silver, ETFs, futures, or digital contracts, ask yourself one simple question. If everyone demanded physical delivery tomorrow, could your counterparty actually deliver? The honest answer is probably no. There is not enough metal. You do not own silver, you own a promise, and promises break. If you are trying to buy physical silver right now, good luck. Premiums are exploding. In Japan, buyers are paying 60% over spot. In Dubai, premiums are around 40% over spot. The paper price says $95. The real world price is $120, $130 or higher, if you can even find it. And here's the paradox that most people don't understand. The lower the paper price crashes, the faster physical silver disappears. Lower prices create more demand. More demand drains supply faster. The crash is making the shortage worse, not better. Now, some people will say this is a conspiracy theory. They will say the silver market is functioning normally. They will say mints are just experiencing temporary issues. To those people, I say this: look at the evidence. Perth Mint suspended, US Mint suspended and repriced 86% higher, Royal Mint out of stock, India defaulting on deliveries, Costco rationing silver, Shanghai drains 27 tons in one day, lease rates hitting 39%. This is not one mint having a bad week. This is every major source of physical silver on the planet experiencing unprecedented stress at the same time. That is not conspiracy. That is data. That is fact. That is reality. Now let's talk about timing. Today is Friday, the last trading day of January, the last trading day of the week. Big moves often happen on Fridays, especially end-of-month Fridays. Options expire, futures settle, positions are squared. The timing of this crash was not random. January was one of the strongest months for silver in decades. Massive gains, explosive momentum. And on the very last day of the month, they crash it. They send a message. They shake out weak hands. They create fear. This is how wealth is transferred from emotional sellers to patient accumulators. Your fear becomes their opportunity. Now, zoom out. What we are seeing today did not start today. Silver has been in a supply deficit for 5 consecutive years. Since 2021, demand has exceeded supply every single year. Global mine production is around 835 million ounces per year. Global demand exceeds 1 billion ounces per year. That deficit has been filled by above-ground stockpiles, vaults, reserves, and inventories built over decades. Those buffers are now nearly gone. Shanghai vaults are critically low. COMEX-registered silver has been declining for years. London vaults are being drained as metal flows east. The system has no cushion left. And now, with mints shutting down and dealers defaulting, we are seeing the consequences of years of deficits all at once. This is not a short-term glitch. This is a structural breakdown. Now, here is what I believe happens next. We are entering a new phase of the silver bull market, a phase where paper and physical completely diverge. The paper price will remain volatile. It will spike, it will crash, it will be manipulated. But physical silver will become increasingly scarce. Availability will shrink, premiums will rise, and eventually you simply will not be able to buy physical silver at the paper price. This has happened before. In 1979 and 1980, during the last major silver squeeze, the same dynamics played out. Dealers ran out of inventory, premiums exploded, paper and physical disconnected. Silver went from $6 to $50 in months, an 800% move. I am not saying history will repeat exactly. The market structure is different, the rules are different, but the core truth remains. When physical supply cannot meet physical demand, price must eventually adjust upward. Paper manipulation can delay reality. It cannot defeat it. Physical reality always wins. Now, there are 3 types of people watching this video. The first is scared. They panic and sell. The second is confused. They see conflicting signals and freeze. The third understands. They see this for what it is, not a crisis, but a transfer. Which one are you? Let me leave you with this. The paper price of silver crashed 22% this week. During that same week, mints shut down, vaults drained, dealers defaulted, China hoarded, lease rates exploded. The price fell, the metal disappeared. One of these is lying, and it is not the empty vaults. This is not a market. This is a magic trick. And now you know how the trick works. This is the hidden economy, because the real story is never on the surface. I will continue to bring you updates as this situation develops. Subscribe if you haven't already, turn on notifications, and drop a comment below. Do you think paper or physical wins this battle? I read every single comment. I'll see you in the next one.